friends and family, we're gonna have to excuse me because of the weird exposure. I'm driving and the sun's setting. It's not exactly setting, but it's late in the afternoon, and so I'm getting a whole bunch of shadows, and it changes the exposure level inside. And you're not missing much. Y'all already know what my ugly mug looks like, so it is what it is. Anyway, I want to take a little time and talk about your business living paycheck to paycheck. Most of us have done it in our personal lives, and primarily, it's our own fault usually, right? We spend too much for what our income is, or something catastrophic happened. We got a big medical bill all of a sudden. We bought too much house, and now we're up to here in house payments. We quit a job because we got mad at our boss, and then we realized, holy cow, that was a really good paying job, and now I'm struggling to find another one that pays as well. We've all put ourselves in that financial bind, and that's what it is. It's a financial bind. It's not just a condition. It's a financial bind, and a lot of people are doing that now with their trucking business, but yet they're still telling everyone how great the trucking business is and you should get in it. I guarantee you guys, most of the YouTube box truck operators, hot shotters, and even you guys that just bought semi trucks, I guarantee you a lot of them are in that position and they may not even realize it. And so, how do you know if you're living paycheck to paycheck? Well, there's some simple tests, I guess you could call them that. In the banking industry, you'll remember when we had the recession, the Fed started doing stress tests on the banks, and they would basically simulate, hey, what would happen if you lose this much in deposits and X amount of people showed up to your branch every day and pulled out this much? How long could you survive, in capital? And they kind of came up with the formula of what they think you should be able to withstand, and a lot of banks couldn't do it. Now, a lot of banks couldn't do it because the mentality there was, you borrowed money from the feds to loan money to borrowers. That's what banks do. We, on the other hand, don't have that option. We use factoring and lines of credit and credit cards, and we finance our equipment. But at the end of the day, do you really have a viable business structure that can survive in these times? Or are you living paycheck to paycheck and you're one big event away from bankruptcy, for lack of putting it a better way? So here's a start. How much money have you managed to put away for an emergency catastrophic failure of your equipment? You should be putting money away every week. Understandably, when you first start out, you're not going to have much of a reserve there. But you should be, every week, putting away money for a catastrophic failure. That's one little private kitty, if you want to call it that. You should be putting money away for equipment renewal. And by that I mean, whatever equipment you bought, you're going to have to replace sooner or later. Now, I know some are going to say, oh no, I've got a 1999 Peterbilt, and I'm going to run that till the wheels fall off. Okay, I get it. But before the wheels fall off, you'll have to do an in-frame, and you'll probably need a clutch, and tires are $500 a piece, and just the tractor alone takes 10 of them. So there's, $5,000 just for tires. So how much money do you have set aside for a catastrophic failure? In my opinion, you should have about 20 grand. Do you have 20 grand set aside that you do not need for anything else? And if your truck fails tomorrow, that 20 grand you can use to tow it to a shop that can do the repair, or tow it all the way back to your favorite mechanic and cover whatever repair it is. And let's just throw out some numbers. If you have a newer truck, by newer I mean it's got more modern running gear, an X15 Cummins costs about 20 grand to do a full-blown premium overhaul. It'll cost about 20 grand. A clutch failure on a semi costs about 2 grand if you have a manual gearbox. If you have an automated transmission, it's closer to 5. And the clutch alone is a big part of that. It's just very expensive. Like I said earlier, tires, if you got an 18-wheeler and you're going to need new tires, the average price for a tire mounted on the truck is about $500. And that's not getting the best equipment. That's just middle of the road. You might even still be in a China brand. But do that math. That's not cheap. All right. So do you have that money set aside? That's one question you should ask yourself. Second question. If you've been at this a year, you should have the ability to not factor all of next month's invoices. And so if you're doing a box truck and you do $5,000 a week, you should have 20 grand separate from the other 20 that can float your finance. In other words, pretend like no money came in and you don't finance any of your receivables for the next 4 weeks. That's 2 hits at 20 grand a piece. So do you have 40 grand in the bank? The next item. By the end of 5 years, if you've been doing this for 5 years, you should have about 5 to 6 months worth of operating expense, not exactly revenue, but whatever it costs you to operate week in, week out. You should be able to cover 5 to 6 months worth of operating costs and have that available to you at the end of 5 years. Now, if you've been doing some aggressive growing, so if you started your company 5 years ago and every year you added a truck or two, understandably that'll be harder to do because your overhead increases with every unit. And likewise, you're putting out cash to purchase every unit and put it on the insurance and yada, yada, yada. And so that number is going to take a little longer to hit. And I can tell you from experience, that will also force you to continue to factor a little bit longer. But at the 5-year mark, you should be able to stop factoring altogether, and you should have enough money to run you 5 to 6 months. If you don't have these thresholds hit, you're living paycheck to paycheck. And so there are 2 items, major items, that provoke this that you need to try and correct. So the first one is there's something in your operating cost that's too high. Whether it's you're paying yourself too much payroll, you're paying too much for equipment, you're paying too much for fuel, you're paying too much for insurance. And even if it's just 5% each that you've overdone, add them all up and that's a lot of money. Smart man once told me, in business, you don't die usually from like one mortal wound. You bleed to death from 1,000 paper cuts. And so if you're 5% high on your equipment, 10% high on your payroll, add them all up and all of a sudden there's all your profit. There's the money you should be banking and you're not. So the other reason for you being in this situation is you're working too cheap. It's real simple. I mean, there's no magic potion. there's no genie in a bottle here. You either spend too much or you don't bring in enough. And so if you're running too cheap, you just haven't let everything catch up to you yet, where it forces you to make a drastic decision, like you're going to sell, or you're just going to stop, or you need like a financial investment partner or something to keep your business afloat. Yellow transportation, or yellow whatever they call themselves, yellow freight, they're an example of a company that spent a long time on the jagged edge, and eventually they fell apart. They just couldn't sustain it anymore. Now, was it they were spending too much? They were a union shop, and so was the union hitting them too hard? I'm not gonna pretend to know any of the real inside deal, and based on what the union said, they had given up money multiple times in their negotiations. Was management mismanaging the money? I don't know. But one thing that does get said a lot in the industry is they were one of the cheapest. If you wanted LTL freight moved, they were the low price leader. And so the inevitable road that you lead down when you go that path is you're eventually going to have financial problems when you are the cheapest. And so simply blindly saying, well, if everybody else can survive at $1.80 a mile, I can too, that's the wrong way to look at it, guys. That is a mistake. No two companies operate the same. When I first started my trucking business, I didn't take a single paycheck from the company for 2 years. I had another business that was giving me a salary. I didn't take a single paycheck. Didn't need to. And instead of taking a salary for me, I used that money to grow. I kept that money in the business so that it could expand. Anyway, those are some targets that any trucking business should be trying to hit. And like I said, if you're adding trucks, that changes. But if you're one truck, you're the driver and you're not buying more assets, all of the things I named, you guys should be able to do. And if you're not, again, you're either going too cheap or you're spending too much somewhere. Payroll, insurance, fuel, equipment, those are all likely candidates. For those of you that have watched some of these YouTubers and they tell you you're going to make $2,000 a week for yourself, it's not feasible to pay yourself $2,000 a week when your truck is grossing $5,000 a week. Okay, that's that in no business model where you're an asset-based business. That means you've got to buy equipment to make the money. In no business model for trucking does that work. Now, if you're a dispatcher, sure, why not? 90% of your income can go to payroll because you don't have insurances, you don't have assets to pay for, you don't have any of that. It's you, your phone, your laptop, and a handful of subscriptions over the course of the month. Anyways, guys, I'm rambling. I hope I covered the points I meant to because I'm doing it off memory. But as always, thanks for watching. I hope it helps. And I hope if you've jumped into this that you're surviving and doing well.